Are you ready to face 2025 with your finances safe? Because if you don't take action today, inflation and economic crises could devour your savings. Can you imagine losing the value of what you've worked for years to build? This isn't an exaggeration. It's happening, and it's affecting thousands of people. But here's the thing. While many are panicking, some people are multiplying their money, protecting every cent, and preparing for the worst. How are they doing it? I'm going to reveal it to you. 5 strategies that the wealthy are already using to keep their money safe, even when economic chaos is tearing everything apart. The worst thing you can do is ignore what's coming, but the best is to act now. So pay close attention, because what you'll learn today could be the difference between saving your finances or being left behind. Strategy 1. Investing in safe haven assets. Have you noticed that every day you can buy less with the same amount of money? Inflation is wreaking havoc, and the worst part is that it doesn't seem to be stopping. And if you think your savings are safe in the bank, I'm sorry to tell you that's an illusion. Every day that passes, your money loses value. Why? Because cash is not designed to protect you from inflation. So, what can you do to stop your wealth from evaporating? The answer lies in safe haven assets. The wealthy have known this for decades, even centuries. In times of uncertainty and crisis, they don't leave their money sitting in the bank, hoping for the best. Instead, they move their money to assets that tend to hold or increase in value when everything else is in chaos. Let's talk about the 3 most important: gold, real estate, and government bonds. Why gold? Gold has been a safe haven for centuries. It doesn't depend on governments or central banks, and that makes it a solid asset when currencies start losing value. While governments print more money and inflation skyrockets, gold keeps its value, protected from that devaluation. In fact, every time there's been a major economic crisis, the price of gold has gone up. Remember the 2008 crisis? Gold soared. It's like insurance against economic collapse. And the best part is, you can literally hold it in your hands. Real estate. What about it? Well, land is limited. As the population keeps growing, the demand for places to live, work, and produce food only increases. Also, in times of crisis, real estate tends to hold or even increase in value, especially in strategic areas. Investing in real estate is not just a way to protect your money from inflation, but also a way to generate passive income if you buy rental properties. Even if the real estate market suffers a correction, over time, prices usually recover and continue to grow. Finally, we have government bonds. These are another safe haven, especially during economic uncertainty. They are secure investments because they are backed by the government's ability to collect taxes. Long-term bonds tend to be a safe bet when markets are volatile, offering a fixed return and not being subject to market fluctuations like stocks or cryptocurrencies. Strategy 2. International diversification. How many times have you heard the advice not to put all your eggs in one basket? Probably more than once. But here's the real question. Are you diversifying your investments in international markets? If all your investment depends on the economy of one country, you're running a big risk, especially in times like these, where local economies can become unstable within months. This is where international diversification comes in. It's like a safety net. If one economy fails, there are others that can keep you afloat. Smart investors are already looking for opportunities beyond their borders. Why limit yourself to one market when the entire world is full of opportunities? Imagine investing in emerging countries, in economies that are booming, where returns can be much higher. Countries in Asia, Latin America, or Africa are seeing growth in sectors like technology, renewable energy, or infrastructure. By investing in these markets, you're not only protecting your money from local instability, but you're also positioning yourself to benefit from global growth. And what about currencies? The currencies of certain countries can quickly lose value due to inflation, but others can remain strong or even appreciate against yours. Diversifying your money in different currencies is another way to protect yourself. Imagine this. While your country is going through an economic crisis and its currency devalues, your investments in other parts of the world keep growing. And we're not just talking about stocks or bonds in other countries. You can invest in international real estate or even in global companies that operate in multiple markets. This way, If one market falls, another can be booming, and your portfolio remains balanced. Strategy 3. Investing in technology and renewable energy. The world is changing fast, and if you're not investing in the future, you're going to get left behind. Economic crises and inflation are huge challenges, but there are also moments when technology and renewable energy become the best bets for growth. Why? Because no matter how many financial problems arise, the world will always need technological innovation. Think about how technology has transformed entire industries over the last few decades, even in the middle of crises. Tech companies, like those in software, artificial intelligence, or cloud computing, are more prepared to weather economic downturns. Why do you think billionaires keep investing in technology? Because that's where the future is. And we're not just talking about tech giants like Google or Amazon. There's a world of startups leading innovation in areas like healthcare, robotics, and biotechnology. Now, let's talk about renewable energy. With the climate crisis and dwindling natural resources, the world can no longer rely on fossil fuels. And governments know this. That's why they're investing billions of dollars in clean energy like solar, wind, and hydroelectric power. This energy transition is not a passing trend. It's the future. The companies leading this change are going to be the winners, even when traditional industries struggle. Imagine investing in the next Tesla or a company that will change the way the world produces and consumes energy. If you focus on these two areas, you're not only protecting your money from inflation, you're investing in the future of the world. Technology and renewable energy are sectors with unstoppable growth, and those who understand it now are going to see their money grow while others are still struggling to keep from losing theirs. Strategy 4. Tax optimization and asset protection. Did you know you can increase your income without earning more money? How? By paying less in taxes. The wealthy do this all the time, and it's something you can apply even if you don't have millions in the bank. Tax optimization isn't some magic trick. It's simply about using the laws to your advantage. The key is knowing the deductions, tax incentives, and legal structures that allow you to pay less in taxes. Why do you think big companies pay so little in taxes? Because they've learned to optimize their finances to avoid losing money. And you can do the same. From deductions for investing in certain industries, to creating business structures or trusts to protect your assets, there are many ways to shield your money from the government. You don't have to be an expert. Just surround yourself with good tax advisors who know the laws and can help you apply them. But it's not just about paying less in taxes. Asset protection is another fundamental pillar. This means safeguarding your wealth from potential lawsuits, divorces, or any situation that could put your money at risk. The wealthy use strategies like creating businesses, foundations, or trusts to ensure that their money and properties are protected, no matter what happens. Strategy 5. Investing in cryptocurrencies as a hedge. Now, let's talk about something that has been on everyone's radar for the past few years. Cryptocurrencies? You've probably heard a lot of opinions about them, some positive and some not so much. But here's the key point. In times of crisis and inflation, cryptocurrencies can be an excellent hedge. Why? Because they don't depend on any government or central bank. Cryptocurrencies are decentralized, which means no one can manipulate or devalue them by printing more money, like they do with traditional currencies. And while they are volatile in the short term, they've proven to be an effective way to protect against inflation over the long term. Bitcoin, for example, has become a store of value for many people who fear their local currencies will lose value. When economies collapse and governments start printing money to fix the crisis, the value of traditional money decreases. But Bitcoin has a limited supply, which makes it a valuable asset when everything else is losing value. And we're not just talking about Bitcoin. There are other cryptocurrencies, like Ethereum, that have innovative technology behind them, giving them even more value in the long run. Ethereum, for example, is not just a currency. It's a platform that's revolutionizing how smart contracts and decentralized applications work. Is it risky? Yes, like any investment. But with a smart, long-term approach, cryptocurrencies can serve as insurance against inflation and uncontrolled monetary policies by governments. Remember, the financial future doesn't wait. If you apply these 5 strategies, you'll be prepared for whatever comes in 2025. Don't let inflation and economic crises catch you by surprise. Take control now. If you like this video, don't forget to subscribe and hit the notification bell so you don't miss out on future tips. And share this video with your friends. It's time for everyone to protect their money. See you in the next one.